Weather's hot and we got thunderstorms. But we're here, you're there. That's all that's important right now. I'm just getting set up on YouTube live here, folks. We have to wait until after the song is done, otherwise it's not going to let us do that because of some it thinks there's some copyright issues. Hot and we got okay, and it looks like we're all ready
We're
to
here,
go.
you're there.
All right, we're all set to go. Good stuff. Good stuff. Now to minimize this and to start the recording. All systems go, folks. All right. Good evening, everybody, and welcome to DayTradeSPY.com's Week in Review. My name is Hugh. And bad news, I don't have a camera here. Maybe it's good news. Maybe that's actually good news. I don't have a camera. You don't have to look at me. But actually, that's bad news. I kind of want to see you. All right, so today is Sunday, June the 22nd. June the 22nd, 2025. Folks, there's the questions box. You'll find the icon on your Zoom dashboard. Click on that. I am the only one that sees that. So I'll certainly look at your questions and comments that you have. A lot of exciting news going on here. Just kind of watching some of the headlines popping up on the screen here. China and Russia condemn the U.S. military strike. Well, we'll see what happens here. Going to give you a couple seconds here to read the disclaimer, and then I'll get back to you in about 10 seconds so that we can move on. All right, so here we go. Okay, you alone are responsible for all your own trading, and past performance does not guarantee future results. I think you all know that, right? Anyway, my name is Hugh, and to be discussed this week, last week's review, we have a little bit of a poll, upcoming week, 2-minute tutorial, and how we can help you, Q&A, your next steps, and let me know the questions box if you are new to Day Trade Spy. All right, if this is your first time here, let me know. Just want to see how many people are new to this. I know we get new people all the time. Just curious. So, all right, let's move on. All right, there's a bunch of people signing up already in the questions box. I'm new, first time here. Welcome, everybody. Welcome. All right, brief history. Lynette, good to have you here. Robert, okay. Oh, a lot of new people. Okay, good. All right, so why listen to me anyway? I don't know. Don't listen to me. What do I know? I don't know anything, right? Um, I spent my early years deep in the trenches. I stumbled on this whole thing. I realized that after my financial advisor blew out half my account, and I was okay with okay, fine. My future's pretty humbled here, but damned if my kids are going to go to a second-rate school. So I scrambled to learn how to do this myself, so I can send my kids to a proper university, right? And in the process, I discovered some pretty cool strategies here. Other people noticed. They coerced me to teach them. And I started bringing home the toys. I started bringing home some successful things, some really good trades, and people started to notice, and they coerced me into training them. So I've been training people internationally since 2010. So we're now in our 16th year, folks. Actually, it was I think it was May 10th or something, 2010. But anyway, we're in our 16th year here, and I'm looking for short-term breakout trades. That's kind of our forte here. Okay, that's what we're doing. We're just going, a little bit at a time. All right, one at a time, and we're just going to keep going like that. And that's kind of what we're all about. So, and it seems to work very well for me. And it doesn't matter which way the market is going. It could be going up or down. We can make money both ways. We do not do spreads. We do not do naked positions. Nothing like that. We like to get in there when the setup presents itself. And when we have that opportunity, we like to get in, make some money, get out, wait for the next setup. Okay. By the way, if I speak too fast here tonight, let me know in the questions box. I tend to get very passionate about what we talk about and very excited. And, I certainly want to keep you engaged, but at the same time, I don't want to lose you with any comments or questions or different things that if I'm going to be getting into. So also, if there's any technical jargon that you might not understand, don't worry about it right now. You're not going to really miss out on a lot. This is kind of an introductory, but we're going to look at the weekend review, upcoming week, this sort of thing. You'll pick it all up, not to worry. So my associate, who is not on here tonight, okay, he does Wednesday night, and we do the trading room together. His name is John Johnson. He's actually a long time Eagle Financial Publications guru. and he retired from his newsletter. Didn't last long. They brought him back. They brought him back as my co-host for the trading room. All right, super nice guy. John has a background in law. He's actually a lawyer, commercial litigation, oil and gas field. Okay. And he developed his unique trading style. Oh my gosh, more than 21 years ago. Highly acclaimed in many publications, media. He's been quoted in all the media, all the mainstream media. Helped thousands of people gain success in the market. And his philosophy is very simple. Take what the market gives you. Do what you want, dig what you do. That's what life's all about, right? Take what the market gives you. Okay. And that's very well with it. So we joined our forces, and we'll talk about that a little bit more later on. So right now, let's take a look. And first, I want to tell you about Spy on the Market. This is a weekly newsletter that goes out free every Thursday. You're going to get this in your inbox. All you have to do is sign up. Just go to our website, DayTradeSPY.com. And when the little pop-up comes up, just leave us your email address. It's just a very brief 3-minute read, very light, relevant, entertaining. We give you like a human aspect of it. This week's topic is going to be the Freedom Fest follow-up. So about a week or so ago, we were over at Freedom Fest in Palm Springs, California. Spent a few days down there, met a lot of wonderful people, and met the staff, of course, everybody from Eagles down there, and just had a great, great time. Learned a few things and said hi to a lot of the folks down there. So, kind of give you a little follow up as to what our thoughts are with Freedom Fest. Check it out. It's going to be in your inbox on Thursday. Now, if you don't want to subscribe, but you still want to get the newsletters, read the newsletters, you can go to our website, DayTradeSPY.com. Up in the top left, you'll see the click the link to Spy on the Market. That's the name of the newsletter, Spy on the Market. They're all there. Actually, if you click the link, you can go back to the archives and read them all. Very brief. It's about a 3-minute read, not even that. And I think you'll find them very interesting, very entertaining. All right. So, not to want to keep it too long tonight. Again, we're supposed to be home actually already yesterday, but we extended our stay a couple days right here, and we're going to be going home tomorrow. All right, tomorrow afternoon. So right after the trading room. That's the plan anyway, and hopefully the airlines will cooperate with us on that. Okay, there's already a comment here from Jim L. You don't take a private jet? No, no, Jim. No, just because you could doesn't mean you should. I don't know, just something funny about that. Maybe one day. Anyway, here's a look at the charts. So again, because I don't have a camera, you have to look at my beautiful dog. Okay, which I like to look at too. That's Lucy. She is now gone several months. We miss her terribly, but we certainly have her close to our hearts. She's on many pictures in her cell phone. All right, we have her. But anyway, here's what happened last week, folks. It was a short week actually because we had Juneteenth, Thursday off. So we traded Monday, Tuesday, Wednesday, and Friday. So on Monday, investor concerns about the Israeli Iran conflict um, eased stocks. The concerns eased, and the stocks rose. S&P tested 604 before it came down. That's pretty well the high during the week here. On Tuesday, we had some geopolitical tensions rising again. President Trump called for unconditional surrender from Iran. Maybe they thought he was joking. Fueled by worries of potential military conflict, SPY dropped 6 points. Trump said that within a couple of weeks he'll make a decision on whether he's going to go in there and blast them out or not. The nukes didn't take him a couple of weeks. Last night, I guess it was when they ran in, and that's it. Took out some nukes, some of their military operations over in Iran. So on Wednesday, the Fed Reserve held its interest rates. That was the big Fed announcement. Revised analysts' forecasts interpreted comments as stagflationary. SPY dropped. Markets closed June the 19th. So we had a bit of an upswing and then came right back down when the Fed's with the projections and Fed Chair Powell's speech. So a little bit of I don't know. The market didn't like what he was saying. Some little bit of negativity in the comment section brought it down. On Friday we had markets reacting to potential interest rate cuts. but overshadowed by developments in the Middle East. The interest rate cuts well, it wasn't cuts, it was sort of the same. They kept the interest rates the same. There's no cuts. They're talking about cuts later in the year, but all of that was good news, and SPY ran up the flagpole here early on, but the developments in the Middle East overshadowed that interest rate hold on that. So the market collapsed. SPY collapsed about 7 points, recovering the loss by the day's end a little bit here, just a little over 595. We're going to see what happens. Right now, by the way, the futures are currently down. The S&P is down about 23 points. We're going to keep an eye on that. Actually, we're going to see what happens. SPY is actually down. I suspect it's going to be a temporary kind of a situation as the day unfolds. In fact, a little while ago it opened here. SPY had a minus 590. Well, she was down to 591.71. We dropped several points here, but looks like it's starting to push up again. But we'll see. We'll see what happens there. All right. So looking at the seasonals. Looking at the seasonal charts, this is what the seasonal line looks like here. The blue line is, of course, the current SPY price. The red line is an average of the last 5 years closing price. Let's just zoom in here. Not to say that historically we're going to follow suit, especially these days with this whole Iranian situation. SPY historically rose 3 points from last week and rose about another 3 points the following week. All right, so it's been sort of going on there, but again, this is history and last 5 years. See what happens with the current geopolitical situation, and we all certainly hope things don't escalate here. But I'm not really sure what Iran is thinking here. If they think they're going to win a war against the U.S., uh, I don't know. I don't see how they possibly can think that. But anyway, it's up to them. Um, the military strike last night was with great precision, and it was swift. And we certainly were not aiming for any, not even Iranian soldiers or civilians. It was a very targeted, strategical, surgical attack. So, anyway, what happened last week? Feds held interest rates in a wait and see mode, monitoring the impact of tariffs and um, other aspects of the market here. The uncertainty that's in the market, that's what they're actually watching, right? Um, and they're definitely wanting to see if tariffs are going to increase inflation. They're taking a situation where, well, they're going to react to it rather than be proactive and drop rates, even though President Trump wants Fed Chair Powell to drop interest rates, but they're just taking this wait and see mode. Anyway, markets do remain resilient, although growth is moderating. Tariff-related inflation pressures may build, but expected to be temporary. This is what the analysts are saying, and the Feds remain in a gradual easy mode rather than aggressive rate cuts. A lot of geopolitical risks right now elevated, but they show limited and manageable effects on the market. Um, it's going to be an interesting week for the market, and it's going to be an interesting. Yeah, we're going to wait and see what happens, and see how the market reacts to all this. As a rule, it's always been a concern about interest rates, but we're starting to see a little more geopolitical influence coming in right now. So that was last week. Here's some charts to kind of get a little graph on going here. This shows the real GDP, gross domestic product growth, and the Fed's recent projections here. The Fed expects U.S. real growth to slow down about 1.4% this year, a little more next year, 1.6 and 1.8% in 2027, according to this model. Now, this could change depending on what happens here in the Middle East. This graph shows the evolution of the Fed's projections for growth, unemployment, and inflation. You can see the GDP growth has been coming down here since December. All right, they're expecting 2.1% annualized. Now they're down to 1.4%. But look at this. The unemployment has been growing, and so is inflation. That's the core PCE they're looking at. So we're starting to see this this effect of uncertainty and tariffs and whatnot in the form of a little bit greater unemployment. Excuse me. Although the rate is very marginal, from about December for every quarter, it's only gone up, 0.1%. So it's not been very noticeable. Inflation has gone up considerably more. This has gone up 3% in each of the 3 quarters, the 2 quarters since the December quarter here. But the GDP growth has actually dropped. It's actually dropped about 3 or 4% in the last since December. So we're seeing this effect here and see where it goes. So as far as last week is concerned, the S&P dropped 0.2%. Year to date, we're still up 1.5. Little different story for the Dow. It's even, pretty much even. Year to date, still minus 0.8%. And the Nasdaq is up year to date 0.7% after a 2%, sorry, 0.2% growth here last week. They're currently up 0.7%. So it looks like the S&P is faring a little bit better than the other two indices here that we're looking at. So, all right, I'm going to do a little poll here, folks. We talk about little polls. We do a little poll every week here. Do you see Iran as a threat to the United States? Now, as of about half an hour or so ago, I had yes, no, or don't know. Well, I also added D into the mix here that as of last night, not anymore. So just curious what you're thinking here in these terms. Let us know here in the questions box, all right? No right or wrong answer, just kind of going through see what people think here of this whole situation. And are we going to be seeing any retaliatory measures from Iran? Is China and Russia going to get involved? Are we going to start dropping bombs against each other? I don't know. I certainly hope not. Hope it's not going to turn into an economic situation either. So, all right, the results are coming in loud and clear. No, hell no. D, not anymore. Okay, there is a yes. Not anymore, not anymore. No, no way, not anymore. No, no way, not anymore. No. Okay. Okay, let's see. 1/10 of a percent, not a percent. Okay, yes, be correct me on that. All right, everybody is saying a no. There's a question. There's one answer here. Don't know. All right. There's a yes. There's still a yes. Most of them are by far no. And no, 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 no. There's another yes. Another yes. Another don't know. Another don't know. Okay, if they retaliate, the grand poobah will be toast. Okay, yes, after the bombing. I suspect if Iran wants to retaliate, they ain't seen nothing yet. Isn't that the saying? They ain't seen nothing yet. I think it's gonna get worse for them. Um, yes, the Iranians unpredictable, which could worsen the Middle East. Still have uranium cells in the U.S. We'll probably see some indiscriminate response from Iran. They'll need to be destroyed. Russia and China should stay out of it. Definitely, they should stay out of it. Oh, here's a comment here. Trump is more of a threat than Iran. You think so? Hmm. I don't know if I want to be on the receiving end. My issue is that, some of these countries over there, some of these people, they treat life very cheaply, like it doesn't matter, or no, they don't give a rat's behind about you and me here. So um, would be probably more willing to use nuclear armaments than we would. And if they start coming our way, oh my gosh, it'd be very, very, very deadly. So, okay, yes, now more than ever. Terror cells. There's a few yeses coming in. My goodness. Could have an impact on oil and inflation. The terrorist threat, yes. And so there's a good few yeses now coming in. Okay. There's still a threat to the world. So not until we get their grand poobah. Okay, well, kind of a mixed bag here. the opinions are pretty much a mixed bag. All right. Well, thank you very much for that. It's just a two-bit poll. It's not meant to be anything one or another. Definitely not putting you on some email list or anything like that. Nothing like that. All right. Let's see what's coming up on the week ahead, folks. On Monday, we've got S&P Global Services PMI report, also the S&P Global Manufacturing PMI report, and existing home sales. On Tuesday, Fed Chair Powell testifies. I believe this is excuse me, day one of a two day affair. Um, so we're gonna see what he says there. CB Consumer Conference Board Consumer Confidence Report, Richmond Manufacturing Index. Wednesday, day two of Fed Chair Powell's testimony. New home sales, unemployment claims on Thursday, along with GDP and durable goods orders, and also a pending home sales report. On Friday, personal consumption expenditures. This is the Fed's main indicator that they use. Personal income, personal spending, consumer sentiment, and inflation expectations. A lot of news this week coming out. A lot of news, and that puts our volatility high, high, high on every day. And expect even greater elevation of elevated volatility when President Trump speaks, which I am guessing he is going to do. Which I'm guessing he is going to do this week because of the invasion. Now, already there are people who are condemning his military intervention, saying Congress was supposed to have approved that and go through the system like that. Also, there's now a call out for his impeachment because he didn't go through the channels. Well, um, anyway, I don't want to say anything, but I'm guessing here that you don't want to tell your enemy that you're coming up against them, right? You want the surprise element. If you tell your enemy you're coming up, they can prepare for you. Not a good idea. All right. Anyway, high volatility. We hope to make some money here this week, and we'll see. We shall see. All right. Let's do a 2-minute tutorial here, folks. How to overlay studies on Schwab, Think or Swim. This is a question that comes up from time to time, several times this week. People wanted to put on overlays on the charts. So let me just see if I can pull it up and give you a hand on that. How do you do this? So let's say you're on a 1-minute chart and you want to, you've got your indicators, right? You've got your indicators. I know that some of you have already have your indicators up, but you want to put say another indicator. I get this asked a lot. Well, what about the VIX? What about the VIX? I say, well, what about it? As far as I'm concerned, it gives you concurrent information. I don't really see any cause and effect kind of information or anything predictive with the VIX. But if you want to put the VIX on, feel free. So here's the way you can put multiple indicators on the price charts, another indicator that you might want to watch. So let's say we want to put the VIX. Now the VIX is that fear gauge, right? When the VIX goes up, the price of SPY goes down. Of course, the vice versa occurs. So let's say you want to put the VIX on here. So you go to the chart on the 1-minute chart here on the left, right click, and let's go to studies, edit studies, and let me see. How did I do this? So let's see the VIX. Scroll down to see the VIX. I hope I remember how to do this. I haven't done it in a while. VIX, VIX, VIX. Okay. Oh, you know what? No, 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 no. Okay, erase this. Okay. Go to the 1-minute chart and right click and go to let me see here. I had this a little while ago. Studies, add a study. Add a study. Now, you see those little arrows? That tells you there's another menu, so you don't want to click on that. Just get the next menu here. So you go to add a study, and then you go over to the charts here to add whichever study you're looking to do. Now, let's say I want to compare with the VIX. I go to compare with, and then again, I get another menu. I'm not clicking anything yet. Compare with, and let's see where the VIX is here. Do we have it on? No, we don't. If we don't have it, we can add it, right? Compare with added studies. Let's try this. Click on this, and then so hang on a second. Maybe it is here. No, it's not. Compare with, well, custom symbol. Go to custom symbol. If it's not on the list, punch it up. BIX. All right. Enter the symbol. Click on OK. Now take a look at this chart here on the left. I just added the VIX. Again, I don't know why anybody would use that, because if it tells you, yeah, its volatility is high and the price is going to be low, well, you know that already just by looking at the price chart. But for those that want the VIX on there, that purple line is the VIX. That is the VIX. It's just a line chart there, and you'll see the value of the VIX right here on the left, right here on the left. And the value, of course, the price is on the right, and the time is underneath here. So you can see the VIX bouncing around here at the beginning of the day, runs up as the price comes down, comes back down. As the stability comes in, the price goes up. Okay, this is what happens. Let's just zoom out a little bit here. Okay, so here we go. You can see the mirror image here between the SPY stock and the VIX, and just how it behaves when the SPY comes down. The VIX is high. The VIX is high. That tells us there's a lot of instability there, and the market will probably come down. And that, of course, it did right here. So that's how you add a comparable chart. If I want to remove it, I put my cursor on that right there. Try to click on remove steady comparison line. Voila, and ask you, say yes, there, now it's gone. So is the price over on the left. So all right, one more. Let me see if we can do another one here. Studies, add study, compare with where did it go? Where did it go? I don't know what I want to compare with. Say the Dow Jones, and let's try the Dow Jones. You can see the Dow Jones being the purple line there. Pretty much emulates the SPX, right? They're all sort of going in the same direction. Um, I'm thinking here, if we change this from added study to down to the Dow Jones, if we change it to the Nasdaq, see what that would be. Let's try and get that changed to the Nasdaq. Maybe the Nasdaq futures. What's that? NQ/NQ. You can see if we can. There it is. That's the minis, E-minis for the Nasdaq 100. Let's see if that can run concurrent. Okay. So now we're seeing again pretty much a concurrent line. Purple line is where the Nasdaq is, and of course the candlesticks are where is where the stock prices for the S&P. So I'm not really deriving any predictive kind of value from adding these indicators online, but some people like them, and that's how you do it. Very easy, very easy. I'm going to, and of course, the numbers here for the Dow right now are on the left, and of course for the stock SPYs up here on the right. I'm going to remove that line, simply highlight it, right click, and that would be, let's try this one here, remove steady comparison rather. You want to remove it, click yes, and it's now gone. Okay, very easy. All right, there is your 2-minute tutorial. And let me get back to, okay, there's your 2-minute tutorial right there. Okay. Um, I never saw much value for the VIX. There's a comment here about the VIX because again, it's concurrent. And whatever I see on the VIX, I see in the price chart. So, all right, let's move along here, folks. Let's talk about the 50K challenge. This is a challenge I started back in January, starting with $5,000. The objective here is to turn that $5,000 into $55,000 by the end of the year for a $50,000 profit target. Okay. And we can trade, there are rules to this. We can trade as many times as we want because we're not tied to the pattern day trade rule. We buy both calls and puts, although I prefer calls. We can trade multiple times a day, as I mentioned here. And this is net of commissions using Tasty. The commission would be $1 a contract to open a position and 0 to close, maximum $10. So you can see here that as of Friday, we had 31,728. Let's see if I can highlight this here. Would this work? Highlighter. Okay, highlighter. There we go. 31,000. There we go. That's kind of cool. We've been scoring pretty good here for the most part. When our actual returns were substantially higher than the $280 that we're looking for. So that's why we're just chiseling away at this budget over here. Okay, so this budget here on the right side, we're currently down $1,672 to where we should be. We keep adding to the mix here, $280. That's going to go on for another few days here before I ramp that up to $300, I believe it is. But we're seeing here the slowly chiseling away at the balance. I've got the balance there on the right, and I'm sure that we should probably be getting clear all drawings, clear my drawings. Okay, I'm pretty confident that we're going to be erasing that 1672 this week. At least that's the objective. So we'll see what happens. So anyway, we're down 1672, made $432 the other day. Our balance is now 31,728 from $5,000. All right, let's see. Where do we go from here? We go to, uh, yeah, there's already a comment here. Looks like I'm going to make the challenge well in advance. That's the objective. All right, so let's take a look here at move on. If I can just get this screen to move on. I think maybe I have to close some of these other things here first. Okay, will this work? There we go. All right, that is the 50K challenge. Now, I want to change this cursor from highlighted to just an arrow. Will that work? That should work. Okay. Maybe not. All right, what does it want me to do? Okay, pause. Mouse. My mouse. Why is my mouse not working here that way? Let's see. No, my mouse should work. Not sure why my mouse doesn't work, but anyway, we'll move along here and pretend that's my mouse. So I want to talk to you about our services, folks, because not everybody wants the trading room. Not everybody has the time. And I even discovered here a few days ago, not everybody even has the determination. They don't want the motivation. They don't want to, they don't want to do it. They just want to be given a signal. They want to be told what to trade when. So we have actually a couple programs here. The DayTradeSPY signal is something that's triggered to your cell phone. All right. So when the signal is released, usually, not all the time, but usually 99% of the time, it's usually triggered off as a text message on your cell phone before 12 noon. All right. So you're walking around, running around doing errands, you're all over the place. Suddenly you get the little chirp or chip or tweet or whatever it is on your cell phone, and oh, I have a trade. It'll tell you which particular option to buy. And the idea here is to buy it right away within 2 minutes. Put up for sale for 5% profit target, walk away and come back later. The money should be in your account. If by some chance it is not sold by the end of the day, sell it for the market price at that time. It's not going to go to zero. Probably should never say never, I suppose, but it should probably not go to zero. Why? Because this particular option is actually for usually for the following week's expiration. All right. We do this 3 to 5 times a week. And it's actually very convenient because you don't have to be in front of your computer, until you get the signal, right? So you can actually be off and running around and, dropping the kids off school, whatever it is that you do, and then simply come back later, collect your profits. The signal is algorithm based, morning trades mostly, and again the buy is immediate. Put up for sale for 5% profit target. If it's not sold by the day's end, sell it here at the market on close. All right. As with all programs, you can get them right away. Simply email customer service at DayTradeSPY for pricing, for the best pricing. So what you see on the on our online doesn't necessarily mean that's what you're going to pay. That's our online charge. But I think you generally get a better price if you actually talk to somebody at customer service. So check in with them. My next step was the is the not it was, but as the pick of the day. The pick of the day is similar to the day trade spy signal. However, a little bit different in that this is emailed to you every morning at about 9 o'clock Eastern time. So there's no waiting around, waiting and wondering, and well, where's it going to be? And this is pretty much every day, Monday through Friday, right? These are hand-picked trades to be bought and market open. I want to tell you a little bit about that. So you get a trade, and let's say it's $3, and you put up for, you want to buy for $3. That's the ask price, but you don't get filled. Why? You look at the price again, it's now 305 or 303. So you put it back up for 303, and now it's not getting filled because the price is now 305. You bring it back, put up for 305. So here's a quick and easy way to settle that problem. If you want it, buy it. By doing though that, so first of all, the pick of the day comes to your inbox, all right, and queue it up. But we don't know what the price is until the market opens at 9:30. Now, oftentimes you're gonna get some huge swings. So first of all, you're gonna get some high bid-ask spreads. Okay, that's for the institutions to make their trades, and what they're doing there is kind of feeling out the market. What you want to do is you don't want to jump in there because the variance is too huge. You could actually get filled for a much worse price than if you just wait a minute or something. Not even a minute. Usually in about 30 seconds, you're going to get a nice tight bid-ask spread as the market establishes its price. And once it does, and if it's going your direction, let's say the call side, wait until the candle turns green, then you're going to buy it. Okay. This is emailed to you 5 days a week. And it's a very specific option to trade. All right. Handpicked to be bought at market open, and then immediately put up for sale for 6% gain. Now you can hold these overnight, but we've been telling people, listen, if you're in an overnight trade like this, best to just sell it and market open. Some people even just take a 40% loss, but if you sell it at market open, it should not go to zero because there's plenty of time with these trades. So you're probably going to be okay with it. All right. That is the pick of the day. Again, contact customer service at DayTradeSPY for the best pricing. This pick, by the way, is an excellent program for a 6% gain. All right. A lot of people are making a lot more when they follow our system, but we have to have some sort of a standard by which to measure success. We put it up for sale for, say, a 6% gain and say that's a success. I don't know about you, but there have been other programs in the past, many years ago. And let's say they're in a trade and the market goes up, 2 cents or 3 cents. And they say, oh, it's a winner. It's a winner. Well, no, pal, it's not. It's not a winner because you would not have sold it for a 2 or 3 cent gain. So, and it's for that reason that we like to suggest that if you don't have your 6% gain, it's not a success. Now, most people do much better than us with these trades. They ride it up. If they're watching the markets, they know how to make a lot more than the 6% gain. All right, next up we have, all right, we just did the pick of the day. Next up we have Inner Circle. Inner Circle, this gives you the morning market assessment. This is sent to you at 9 o'clock Eastern time every morning. It's a little bit of a synopsis. John writes it as to the way he sees the market unfolding for the day. He'll give you some key news items, support resistance numbers, that sort of thing, and his opinion on whether the market's going to go up today or not, or go down. He's been very accurate lately with this. He's actually always accurate because he looks at different things, many different things. In fact, he even emails me and calls me to say, well, what do you see? And we discuss the various strategies, and he makes a determination. With the Inner Circle, you'll also receive the follow-up report later in the day or the evening as to what we actually did. Okay, so we're not just talking through our hats here, but we actually trade what we say we do, right? And you'll be invited to our Wednesday night weekly meetups at 8 o'clock Eastern time. If you miss it, not a problem. All right, not a problem. These sessions are recorded. You can always listen to them later on. Okay. Wednesday night meetups. All right, been doing this now for over, oh my gosh, well, in our 16th year, the Center Circle weekly meetup has been going. So stronger than ever. And again, the meetups are recorded for later review. All right, folks, if you're wondering, if you're new to Day Trade Spy, wondering, well, what program should I do? What should I do? If you don't want to spend a lot of money, you do want to get started with some of the things that we do, get into the inner circle. It's an outstanding way to get started, even if you're new. Great way to stay in the know if you're a seasoned trader. All right, and it just gets you in the frame of mind as to what we're doing and how we execute our trades. I think it's an excellent resource. You can of course ask questions all night long on the weekly meetups. That's what it's all about. Nice little discourse there. It's also the most affordable service. I don't have the pricing for it yet, but I'm sure the customer service at DayTradeSPY will let you know. I want to say an introductory price of $89 for a quarter, something like that. I thought I saw somewhere, but check with them because they'll give you the information, the current information on this. And of course, all programs, customer service is right on their game with this stuff. Okay, that's the inner circle. Next up, we have the trading room, folks. The absolute famous trading room that everybody's talking about. This trading room is hosted by yours truly. My name is Hugh, by the way, and John. We like to tease them and say, well, what do we call you? They call me Humble Hugh. But what do we call you? Let's see, Jolton John, Just John, um, Jovial John. We're always kidding around as to what to call him, but um, John and I have been trading in all seriousness. We've been trading a long time, folks, a very long time independently, and in other groups and different things. But we learned a lot, and we know what we're talking about. We really do know what we're talking about here. Um, and this is where our strategies come alive every morning, 9:20 to 10:30. So here's kind of the way it works, right? John comes with his set of indicators, and I come with my set of indicators. And when we say, all right, I say the market's going up, John said the market's going to go up, it's probably going to go up because of the synergy that we have from bringing these individual experiences and indicators that we're using, that we follow. So I think it's a really exciting thing that really makes our success rate very high. So you're going to learn and earn. These are interactive, exciting trading. Learn and earn and learn. We trade what we teach what we trade. All right. We teach what we trade and trade what we teach. I think that's very important. I don't know if you've been in any other training sessions, training webinars, programs where they give you a lot of theory, right? In some cases, they throw a satchel full of books in here. Good luck. That's not the way we do things, all right? What we do is we want to give you some sort of a hands-on, holding your hand through the trades type of teaching and training and how to repair trades and all these different things that we do. And that's what you're going to learn in the trading room. I think that's actually really important that you do this. You get that tactile feel of actually executing these trades. And we tell everybody, saying, folks, listen, if you're new to this, get into paper trades first. Do a lot of paper trades, get very comfortable with it before you transition to real money. And by the way, the trading room, this is where you're going to get your questions answered. All right, been doing this live since 2010, and we have an interactive component to it, just like this webinar here. We can ask questions. Now, John and I are the only ones that see them, so go ahead and ask us whatever you want. We do try to get to most of them every day. There's some that slip through the cracks, simply just don't have time or not relevant or whatever, but we definitely try and get through all of them. Okay, I think it's very important. All right, more information. Contact customer service at DayTradeSPY for pricing. And folks, as I understand it, this is a special introductory offer at $6.99 for 3 months. That works out to about half of a Subway sandwich a day. You don't think we're worth it? Not for each of us, but for one of us. John or myself. One of us is not going to eat. The others can just eat half a sandwich. Folks, I'm going to tell you right now, this is something I don't think as a trader you can afford to not subscribe to. All right, you're going to learn more, and some of the comments I get on this, absolutely phenomenal. So many people have said that, oh, they made more in one trade than what this cost them all year, type of thing. Happens all the time. And in the last couple of weeks, we had an extraordinary large number of people tell us that, like, just this is the best thing ever. So do consider the trading room. This is where you're going to learn to earn. Learn to earn. At some point, if I get hit by a bus and I'm lying dead on the ground, you should still be able to carry on and trade as much as you want, all you want, right? That's what we do. That's what we teach. So, all right, let's get to some questions here. As I mentioned earlier, I don't want to keep you much more than an hour. I think I mentioned that, maybe not. And I would like to address some of these questions and comments in the questions box. I want to take a look at the futures right now. They were all down. They're probably very much down. Currently down 24 and a half. Not much worse than what it was earlier today. That's good news, believe it or not, for probably, well, we're going to see what happens tomorrow. But very often I find that when the market opens down like this, you're going to find some pretty good support and it's going to start pushing back to the upside. Right now, we do have this pressure to the upside. There's a little bit of resistance right around 592, but there's some pretty good chart patterns setting up here. I think tomorrow could be an up day, but anyway, we'll see what happens. The question here is, I'm sitting in 600 calls that we're holding for next week, I believe next Friday. I am in those as well. I'm holding on. I'm going to wait and see what happens Monday and Tuesday, Wednesday. I expect to be out of them by Thursday, but we're going to see what happens now. Fed Chair Powell's testifying on Tuesday and Wednesday. There's going to be some volatility there. Markets could go up from his testimony. We're going to wait and see. Right now, wait and see. Get in the trading room. That's where we actually address these issues in a real-time environment. All right, real-time environment. I can't. If you're not in the trading room, I cannot be emailing you with our opinions on what we discover. John and I both look at these things very objectively, and we don't like to be the bearer of bad news, but we will call it the way we see it. And right now, we don't see anything one way or another. Obviously, if you're if you're holding those, it's going to open to the downside. Probably not the best time to sell them. Right? You want to sell them when things are starting to come back in your direction and whatnot. But you might want to take a look and see what kind of a loss you would accept on these things, because if the Iranian situation doesn't solve itself fairly quickly, we could be hovering on a low mark here. Okay, so wait and see what happens. All right, some more questions coming here. Matthew G, I believe John has been a great addition to the team. I've done much better since he's teamed up with you. Thank you so much for that, Matthew. We thoroughly enjoy his take on the market and his analysis. Very, very good. Very good. Excellent, as a matter of fact. Again, he looks at Fibonacci and Andrew's pitchfork and perhaps a couple of different things, but um, he's very meticulous, very particular about his trades, and he's like me. He doesn't accept losses too easily right now. We don't take the losses too easily. So, um, but um, but yeah, thank you for that. Those comments. I'm sure you'll be happy to hear that. All right. Mark's asking, is it possible to send out an update on the pick of the day? Let's see, reconciliations when they don't hit our targets via text or email. Okay, Mark. So what we do is, as a rule, when we close up after the trading room at 10:30, we kind of that's it for the trading day. Now, in the trading room, we don't leave our trades unattended. We will discuss how we're going to leave those trades, what we're going to do. I believe in the rules section of the pick of the day, it says either take a 40% loss or sell it at the end of the day. But if you're in the for market value, market price. But I believe that if you are in our trading room and you're stuck in one of these trades, we do discuss our exit strategy. I don't like to sell for loss at the end of the day. There's usually plenty of time built into our trades. You can hold overnight if you want to or need to, and not have too much of a hit data-wise. Okay, so if you are in one of those trades, get in the trading room, and that's where we discuss things in a sort of in a real-time market environment. But the question, can we send out a text or email? The issue is that we don't always watch the markets after we leave. We like to make trading our slaves, not us the slaves to it. And neither John nor myself may necessarily be watching the rest of the day. Now, if you're expecting an email or a text and it doesn't come, you'll be disappointed, right? So we don't like to commit to that, but we don't leave them just dangling either. These always have an exit strategy, which you might want to do in case you really are headstrong on having a stop. You might want to put on a trailing stop, or some people use a 40% stop loss. And other people just trade and close it at the end of the day for market price. And I know people that will hold this overnight. Okay, they'll hold the pick of the day overnight, and with the anticipation that it's going to come back in the direction. We have to do our homework and see which way it's going to, probably going to go the next day. I will say that I don't like to hold trades overnight, especially over the weekends. I will if I must, but I definitely don't want to be in these things on a Thursday or Friday if it's going to expire on the same day. All right, hopefully that makes some sense. Okay, let me see. Let's go on here. Hopefully they're going to get rid of Powell soon so the rates will drop. I don't know. He is driven by a political agenda rather than doing the right thing based upon the numbers that are being shown. I'm not really sure I understand that question because I don't really see inflation to be huge. If inflation is high, um, or is he looking to stir the market with lower interest rates? Uh, they tend to want to keep a lid on inflation and the money supply and different things. If inflation gets really high, they'll probably raise rates, right, to lower interest, lower the inflation rate. Well, we'll see what happens. I know there's a conflict between Trump and Powell. Trump would like lower interest rates. Easier money is also inflationary. So, man, we'll see what happens on that one. So, all right, some more questions. Excuse me. All right. Excuse me. I've been talking most of the day here, trying to relax a little bit, but very hot down here, very stormy weather. Okay, take a look here. Going through all the comments on the polls. Uh, yeah, World War III, and no, I certainly hope not. I don't think anybody wants that. Um, okay, new and existing home sales are if they're low, well, that drives SPY up because it's anti-inflationary. If new and existing home sales are low, that means the economy is kind of stagnant. It's not really chugging along, and that would probably be more inspirational to lower interest rates to spur on the economy. If you're getting a lot of new home and new existing home sales more than the forecast, that's inflationary because there's a lot of excitement around it, and it's not just the homes, but all the furniture and appliances, what they call the white appliances. That's your washer, dryer, fridge and stove, that sort of thing. Um, Freezers, that sort of thing. If there's a lot of new home sales and existing home sales, you're going to buy a lot of furniture and appliances. So that's going to be inflationary, which will inspire interest rates to go up, which the stock market does not like, and you'll see it coming down. There's a lot of inverse relationship between the economy and, of course, interest rates. When the economy is slow, they are going to drive interest rates down to spur on markets. But with high inflation rates, you're going to want to increase. They're going to want to increase rates so that the money supply dries up a little bit and brings inflation down. Yeah, okay. All right. The Democrats are looking to impeach Trump again. What else is new? Yes, I know that. Who said that? Okay, Howard. So, okay, let's see. Okay. Got a question here. Somebody's asking me about what condos are the best in Florida. I don't know. I don't check them out. They're all over the place. But if you want some, just come on down here. Da, 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 da. Okay. I have to refund my account between 65 and 69. I'm not really sure I understand that question. Do you exit your calls on Friday? I am still in calls, I believe the 600 calls for next Friday. I'll be taking a look at that and see where the market's going to go on those things. I might accept a bit of a loss on those. I'm not really sure. I may or may not exit on, well, probably not tomorrow because we're flying back tomorrow afternoon. So I'm gonna probably be stuck on those for at least the day anyway on that. For the 5,000 to 50,000 challenge, should we add subscription costs? Okay, so that challenge that we're talking about, that 5,000 to 50,000, we actually do that during the trading room. So anybody in the trading room, that's all part of it, as is the OMG strategy. Okay, so we talk about that. So no, there's no extra charge for the 5 to 50K. It's something that's you sort of do in the trading room. So question for the pick of the day: should we at least wait until the candle is closed in the proper direction? The answer to that is no. When you see the pressure going in your direction, get in then. Look at the 1 minute chart. So the pick of the day works like this. You get the option trade. You're supposed to trade this right at the beginning of the day. At 9:30, right at 9:30, get in there, take a look and see the bid ask spread. If they're nice and tight, you got a price. Okay. If they're fluctuating all over the place, bouncing around, there's like 5, 10 cents difference between the bid and the ask. Wait those few seconds until they come together, and all your orders are going to be limit orders, not market orders. Okay. And once you get the direction, take a look. Is there pressure to, let's say the pick was calls, right? Is the pressure to the downside? If so, wait until that pressure turns back up. Take a look at the 1 minute chart. Then when you see the pressure reversing, going back up, get in then. You'll probably get it for a few cents less. That is the objective with that. So um, and then of course just put up for sale for 6% profit target. You should probably get it. Well, lately it's just been in a few minutes. So okay. And another thing here. Another thing with that, if the market is going really quickly on you, let's say you are in calls and your ask price is say $3 and you put up for say for $3, you want it for $3. Well, now it comes back, you couldn't get it because the ask is now 305, and then you submit it for 305. You don't get it because now it's at 308. You go through this whole process. Look at if the market is really moving in your direction and the price is evading you, then buy it for a couple of cents more than the ask price. I know it sounds a little crazy to do that, and you feel like, well, wait a second, this isn't the way it's supposed to be. I'm supposed to get it for less, not more. However, all right, if you want, it puts you in the front of the line, and then as it's going up, you're going to grab it, and chances are, as soon as you can get that order, the sell order in, chances are it's going to fill right away too. So you'll probably and this is how we make our money in the first couple of minutes real fast, usually with just like a few seconds, really. That's what we do. That's how we get these things. So, all right, let's see here. Some more questions. Okay, when do we send out the link for the trading room to register for next week? Alex, the link had gone out at about 4 o'clock. Check your spam, junk, other boxes. Check your inbox. That will send out about 4 o'clock Eastern time for next week. All right, take a look and see. You should have it. The links are going to be the same for every day. So, all right, let me see. How long does the trading room last in the morning? We go 9:20 to 10:30. Just a little over an hour now. Admittedly, sometimes we go a little bit later, 10:32, 10:33. I think the other day we went to 10:45 or something. The odd time when we have to cut out early, like we did a couple weeks ago because we're in Palm Springs and we actually had to get ready for our second trading room that day. So we actually bailed out at 10 o'clock. Okay. But whenever that happens, we always make up for it. In fact, John had already more than made up for it the next day by staying on till 11:15. It was a long session for him. So we shall see. We shall see. So yeah, generally go till 10:30, give or take a couple of minutes here. Okay. Yes, I did mention that those trades in the 50,000 trade are not subject to the 3 trades a week day trade rule. All right. So the gentleman I'm working with on that, he's very well heeled. He can trade in and out as many times as he wants. That's kind of the objective here. So there are ways around the pattern day trade rule, which gives you 3 days, 3 trades in a 5 day period, both directions. Um, my favorite sort of thing is just get a cash account. And let's say you have $10,000 in your cash account. We can trade as much as you want until as long as you don't go over the $10,000. So let's say your first trade was $5,000 and you made 2,000. All right. Well, you can't trade that profit, the 2,000, until the following day, until the funds settle. So all things being equal, the next day you can trade $12,000, and you can ramp it up like that. Be very careful with that rule. I believe you get 2 warnings, and the third time they'll suspend your account for 90 days. I can't think of a worse uh, I can't think of a worse punishment for a trader than not allow him or her to trade, right? But if you ever do find yourself on the wrong side of that, so let's say you get the pattern day trade rule and they suspend your account. The answer that I was told by a trading platform, right, was to simply open another account. You can even open it up in the same with the same company. Just open a second account, transfer your money from the suspended account into your new account, and off you go. All right, more questions. A couple more questions, then we're going to wrap it up here. So, all right. Okay, so I use your 1 minute chart to determine which way the market is going. I see your mornings. The 1 minute chart is not on your screen at 9:30 because we're looking at something different. I'm not sure, Robert, what we're looking at, but we should be looking at the market, the charts by 9:30. And that's kind of the rule that we look at. I'm not sure what else we'd be looking at there. Um, So if you find that you're not seeing our screen at 9:30 that you're looking for, mention in the questions box and we'll certainly get to the screen. But I'm pretty sure we're looking at the screen now at 9:30 every morning. So all right. Okay, let's see. Oh, there's a question between boxes between 65 and 69. That's what is that what you're talking about there? Let's go back in time. Let's go back here. What you're talking about here. Okay, between 65 and 69. This is it here. Hang on. What's going on? Here it is. Between 65 and 69. Uh, I'm not really sure. I'm not really sure what you're referring to here. Let me see here. What are you guys talking about here? The chart of the challenge. Line went from 0 to 65 and 69. Oh, you could be referring to um, okay, could be referring to all the trades before this. Well, it's just that they're so long. We started this in January the 3rd or something. So there's a lot of trades. I just put these few lines up in here, if that's what you're referring to. I mean, most of this particular chart is hidden in the back there, and I'm just showing the last few trades here from trade 108 to 119. Okay, that's if that's what you're referring to. Okay. We started with $5,000, looking to make 5% a day here and just cumulatively adding to it, adding to it, adding to it. That's kind of what we're looking at. So, all right, let's move along here and kind of get things wrapped up. Any other quick questions here? Okay, let's see. What are the factors that you use to set the strike price and date for your daily recommendations? Okay, so our daily recommendations. Okay, so the signal is an algorithm. All right. And we can't release that code to you as to what we're looking at there. But in the pick of the day, John and I get together every morning and we discuss what we should use for the pick of the day. So again, we don't, we look at a lot of different things. We look at fundamentals, we look at technicals, a lot of different things go into that mix. put that all in the mixture, and then we come up with a trade. All right, come up with a trade, and then we send that to you, either calls or puts, or a no trade. And if you get a no trade, that doesn't mean that that means that don't trade that because chances are volatility is too high, and that's what happens. If the volatility is really really high, it's probably best idea to stay out of the trade. It's always better to not be in a trade wishing you were than to be in a trade wishing you weren't. So that's what we use there. But Ron, we don't discuss what conditions we're looking at. We're looking at a lot of different things. I'm looking at my technical indicators. He's looking at his technical indicators. We marry that with the fundamentals, and that's where we come out everywhere. So, all right, Alex, checked everywhere. Spam did not receive now. Even I paid for the program. No trading room, not good. Alex, let me see. Okay, Alex, if you can send me the receipt on that, send it to Hugh G at DayTradeSPY, and I will take a look and send you the links. You should have it. I'm not sure when you actually subscribe to that. You should have the links for this week. All right, and I'll take a look at that. So, all right. Look at the right side of the challenge chart, not the chart. I'll have to take a look at that later. Folks, I realize the time here. It's 9:07 right now. I'm going to run off. Day trade round trip rule is 3 limits. So the solution is to open another account. What would happen every week? No? Okay, so we're talking about this real quick here. The 3 round trip trade limit in a 5-day period. This is to sort of alleviate that gambling effect. So if you are caught in that, only trade what your account balance has. Don't go over that. I also know people they'll have 2 or 3 different accounts. One gentleman has 4. He's got TradeStation, Thinkorswim, Tasty Trade, and something else. And he's got money in all 4. Now, I haven't talked to him in a while, so I know what he's doing now. But he would trade 3 times in Thinkorswim, 3 times in TradeStation, 3 times in Tasty Trade or something. And then when he's used all that up, then he goes back to Thinkorswim, keeps making the rounds like that. A lot to keep track of there. But if you can do it, hey, more power to you. And then the objective there was then when he gets enough money together all together in all 3 accounts or 4 accounts, whatever he's got, then he consolidates them all into his favorite trading platform and just trades that. Okay, so you can do that. All right. Okay. Alex, I will pay for the master class. Okay. When you have that, okay. Alex, I'm going to ask you to just email customer service at DayTradeSPY for that. Okay. And then, you should get the the emails from that. Okay. So I'm not sure when. That was quite a while ago you got that. Okay, you should have. Yeah, get a follow-up on that, Alex, okay? As to what where your email should be on that, okay? And I will get the links to you on that, so shouldn't be a problem. All right, folks, listen, I'm gonna let you go here, and don't forget, yeah, sign up for everything we do, and hopefully you'll get good at this too. So. All right, stand by to subscribe to our world famous DayTradeSPY trading room. Been a pleasure. Good night, everybody. And the sun, be great at what you do, give it all of you, and trust the process to keep your eyes on the prize. I can